Okay, let's talk investing. Today, we're going to cut through all the noise and build a simple but really powerful blueprint for your own personal investing. Let's get right into it. You know the feeling, right? You're just bombarded with all these conflicting tips, crazy jargon, and people yelling about the next hot stock. It's so easy to feel lost, or worse, so paralyzed that you just do nothing at all. But what if you could have a clear, actionable plan that just cuts right through all of that chaos? Well, that's exactly what we're going to build together, right here, right now.
To make this super simple, we're going to use an analogy, building a house. First, you need the blueprint. That's your why. Then you lay the foundation, your how. Next, you choose the bricks. That's your what. And finally, you hire the builder, your where. So let's start with that all-important blueprint.
Think about it. Every successful project starts with a solid plan. Before you even think about investing a single dollar, you absolutely need to know why you're doing it. This is, without a doubt, the most crucial step.
So professionals call this an investment policy statement, or an IPS. I know, it sounds super formal and complicated, but it's not. Just think of it as your personal rulebook for investing, a short document you write for yourself to keep you on track. This is the thing that stops you from panic selling when the market gets shaky. Your rulebook just needs to answer 3 simple questions. 1, what are you actually saving for? 2, when do you need the money? And 3, how much turbulence can you really stomach along the way? Answering these honestly is probably the single most important thing you'll do.
And here's why that matters so much. Research actually shows that investors with a simple, written plan are twice as likely to stay invested consistently. This plan isn't just some document. It's your tool for building confidence and discipline for the long haul.
All right, with our blueprint in hand, it's time to lay the foundation. This is your how, the actual strategy you'll use to structure all your investments.
We're going to use a simple and really proven strategy called the core satellite approach. It's perfect if you're just getting started because it beautifully balances stability with opportunities for growth.
Think of it like this. The core is like your castle, the strong, steady, unshakable center of your portfolio. The satellites are more like your rockets, smaller, targeted bets on exciting areas you think might just take off, like AI or clean energy. The core gives you safety. The satellites give you that potential for extra growth.
And here's what that actually looks like. Usually your core makes up the huge chunk of your portfolio, maybe 70 to 80%. It's the anchor. The rest, that smaller 20% slice, is for those satellite positions. This structure makes sure that even if one of your rocket launches doesn't quite work out, your overall financial house stays standing strong.
Okay, so we have the blueprint and we have the foundation. Now let's talk about the actual bricks we're going to use to build this house, the specific investments you'll buy.
For your core, the best bricks you can possibly use are low-cost index funds. They're designed to just mirror a whole section of the market, like the S&P 500. And for a tiny, tiny fee, we're talking an average of just 0.06% a year, you can own a small piece of hundreds of companies. That's instant diversification, and that is the key to stable, long-term growth.
Now, for adding those exciting satellites, we have another absolute game-changing tool, fractional shares. This means you don't need hundreds of dollars anymore to buy a single share of a big tech company. You can invest with just 10 or 20 bucks and own a small slice. It's incredible.
So the process is really simple. First, you build that solid core foundation with your index funds. Then you use the amazing flexibility of fractional shares to sprinkle in those smaller, targeted satellite investments that you're excited about.
We've got our blueprint, our foundation, and our bricks. The final piece of the puzzle is the builder, the platform where you'll actually go to buy and hold all your investments. You've got 2 great choices here. Robo-advisors are these automated platforms that pretty much do everything for you for a very low fee, which is fantastic for beginners. On the other hand, DIY platforms give you full control, but they do require more discipline. Honestly, there's no wrong answer here. It's just about what fits your personality best.
So there it is, a complete plan from start to finish. Let's just do a quick recap to see how all these pieces fit together so perfectly. First, your why is your personal rulebook, that IPS that keeps you grounded. Your how is the core satellite strategy that gives you both safety and the chance for growth. Your what are those powerful low-cost tools like index funds and fractional shares. And your where is simply the platform that brings it all to life. And as you get started, just remember this timeless piece of wisdom. Your goal isn't to be some genius who predicts the market's every single move. It's to build a solid plan and then just stay invested, letting time and compounding do all the heavy lifting for you. Your financial future isn't some far-off, abstract destination. It's a project that you are building one brick at a time, starting today. So the only question left is, what's the very first brick you're going to lay?